Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. And it's 2-for-1 today. With the pending merger between Premier American Uranium and Nuclear Fuels, we are going to hear from Premier American CEO Colin Healy and from Nuclear Fuels CEO Greg Huffman. Now, during today's webinar, forward-looking statements may be made. Actually, before we get to that, they will provide the rationale for the merger, give us an exploration update and an outlook. Then we'll take questions. We'll get to some questions, as many questions as we can. Please type them into the chat box. But before we kick things off, we need to discuss the fine print. Now, during this webinar, forward-looking statements may be made. For Premier American Uranium, I'd direct listeners to its forward-looking statements outlined on page 2. And I think through page 3 of its corporate presentation, that can be found on the company website, premierur.com. For Nuclear Fuels, check out page 2 of its presentation. That can be found on the website, nfuranium.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Premier American Uranium in particular. With that said, why don't I turn the floor over to Colin and Greg to speak about the merger. Guys, take it away.
I'm with Greg Huffman, President and CEO of Nuclear Fuels. He'll be taking over some of the presentation, but I'll kick it off. We're really excited to announce back in June the acquisition of Nuclear Fuels. It really does create the largest pure play exploration only US focused company in the uranium space. So we're very, very excited to put these two companies together and create a larger platform to go out and continue to do what Premier was designed to do, which is acquire, explore, develop, focused in the US. Just on the transaction rationale to kick things off here, creating America's leading uranium explorer, 12 projects across 5 key U.S. states, great historic uranium production from these states, and tying in 23.5 million pounds of resource from our Sabieta project in New Mexico with the Kaycee project, which is the flagship project of Nuclear Fuels, and combining that with our Wyoming project, Cyclone, really does create an exciting vehicle for U.S. exploration. For us, we have 8 to 12.5 million pound resource exploration target on our Cyclone project in the Great Divide Basin in Wyoming. At the Kaycee project, they have 11.5 to 30 million pound resource exploration target. This more than doubles our footprint in Wyoming. And more on the low end of the exploration targets, it increases by 150%. On the high end, it increases by 250%. So a really compelling transaction when you combine these two companies and look at the proximity of the two projects, which we'll get into, to existing production, very close to licensed and permitted facilities, ISR processing facilities in Wyoming, both our Cyclone project and the Kaycee project. And Nuclear Fuels and Kaycee was the number one asset in our acquisition pipeline. So we were very excited to announce a transaction to bring that into the fold and really create a platform that can go out and do more things. Our backing at Premier is one of the key reasons that I came to work for this company back in March of last year, backed by Sachem Cove, founded by Mike Alkin and our chairman Tim Rotolo, a prolific uranium investment fund. IsoEnergy owns a large portion of our stock. enCore is an anchor shareholder for Nuclear Fuels and owns Premier. Mega Uranium, supportive shareholder, part of the group that kind of the group from inception between Consolidated Uranium, Mega, really in Premier's DNA. This acquisition model that we'll get into. Fully funded for growth, going to have a strong cash position coming out of the transaction. Nuclear Fuels raised $14 million back in November of last year. At announcement, we had about $2 million. So coming out of this, we have a very, very strong cash position and a much larger company to go out and do more M&A and deliver exploration results to the market as well. Just on the transaction quickly, we're acquiring all the issued and outstanding shares of Nuclear Fuels under a court-approved plan of arrangement. The exchange ratio, it's an all-share transaction, 0.33 PUR shares for each Nuclear Fuels share. At announcement, representing a strong premium. Nuclear Fuel shareholders are going to own about 40%, 41% of the combined company, with Premier retaining about 60% ownership. Requires key court approval, 66 2/3 approval in a shareholder vote. That Nuclear Fuels is now scheduled for August 13th, I believe. And then quickly thereafter, we'll seek final court approval for the transaction. As far as management and board, we're going to be Nuclear Fuels has two nominees. Greg has agreed to be one of the nominees, and we're just waiting for Nuclear Fuels to declare the second nominee. But Nuclear Fuels is backed by a very strong board. So there's a lot of good candidates, several key candidates to augment our board, which I think is one of the strongest in the junior uranium space, period. So we'll show the board, but we've got Tim Rotolo, as I mentioned, co-founder of Sachem Cove. We've got Marty Tunney, who's the chief operating officer of IsoEnergy. Got Mike Harrison from Sprott. Very, very strong board for a company our size, and a fantastic platform to continue to grow the company. I already touched on the timing a little bit, but the close is expected in late August, with the shareholder vote taking place on August 13th. And I believe the final court approval date is August 18th, and then we'll look to close very, very quickly thereafter. Pro forma cap structure, as I mentioned, creating a larger, stronger platform, just over 100 million pro forma market cap, strong cash position. Looking at the shareholder register, the URNM, URNJ ETFs owning about 10% pro forma. That's based on our calculations and a bit about what they currently own of Premier. Looking for enCore to be just under 10%, ISO at 5.4%, Mega at 2.3%. And Sachem Sachem owns about 36% of Premier American right now. Falls to about 23.2% based on our math. Really, really strong shareholder base. As I mentioned, I don't think this is paralleled anywhere else in the kind of sub 200 million market cap, if not higher, space in the uranium sector. So incredibly strong backers, a lot of financial support. They've been involved in our past financings and continue to support the name both in financings and in the open market. So like I mentioned, one of the most important reasons for me joining the company. Recent analyst coverage, we've got Red Cloud, Haywood, Holdco, Beacon. So we're starting to build up research coverage as we grow. And I think with the larger platform, that's going to continue to expand. This is just a slide about the consolidation strategy that Premier has adopted. We were spun out of Consolidated Uranium just prior to being acquired by IsoEnergy back in December of 2023. So we've been trading since then. I joined in March of 2024. But with that came a lot of the consolidation DNA. Consolidated Uranium had run a consolidation strategy from kind of mid 2020 to December 2023 before being acquired, with incredible returns for shareholders. Over that period, we also saw strong uranium price performance, which always matters. There's a lot of correlation between uranium equities and uranium price. And I think that we're in a similar situation right now where, from February of 2024, we're coming off $107 down to about $71.5, $72 a pound right now. And I think that we're starting to see a clear base in the uranium price. And I think that as we make acquisitions over the next 12 to 18 months and continue to grow this portfolio, we're also going to start to see the uranium price creep up. We know it's undersupplied. We know that new production is going to be difficult. We know that very new production, current production is having trouble ramping up. And we're seeing various pieces of evidence to show that we're going to continue to be undersupplied for at least the next 3 to 4 years until some major mines are potentially commissioned. So I think the backdrop is incredibly strong for the strategy that we're carrying out. Track record of value creation through M&A. This is just a little bit, as I said, we're only about a year and a half old, but starting trading in December of 2023. Our first acquisition was a company called American Fuels. That's where our Cebieta asset in New Mexico came from. And when we acquired that, it had never had a 43101 resource on it. Through the process of acquisition, our technical team, which is extremely deep and familiar with the assets in the regions where we're looking to make acquisition, Wyoming, New Mexico primarily, identified this as one of the best potential assets for resource. We liked it because it was on the Cebieta land grant, which is a private land area, so no NEPA requirement for the Cebieta project, which was an advantage in New Mexico for sure. But by the end of the transaction, by June of last year, we had put in place a resource of 23.5 million pounds. You can see the majority of it, the vast majority of it, in the indicated category. And what we're working on now is moving that very quickly from acquisition to a resource update and a PEA, and we're looking to have that PEA out later this year. Looks like sometime shortly after the transaction is what we'll be targeting for the PEA. So looking forward to get that out there, but it really represents our ability to advance assets quickly. Cebieta is a perfect example of acquiring and then developing, or spending some money at most efficiently to get the most out of the project. So I think moving that from resource to PEA within 13, 14 months is an incredibly strong success. You can see from the scaling up of the company, at IPO 40 million, following the American Fuel transaction 83 million, and now pro forma bringing in Nuclear Fuels at 102 million. It's hard to understate the importance of scale when you're trying to carry out a consolidation model. It really makes each successive transaction slightly easier as you grow, because each one becomes less dilutive, and you are able to maintain share strength and absorb the impact of transactions. And the last chart here is just a picture of our growth in terms of land position, starting off with 44,000 acres and building it up through acquisition to all the way to 104,000 acres. So a really, really strong platform to go out and continue to do M&A, but also to deliver a significant amount of news flow. We're currently drilling the Cyclone project in Wyoming, and Nuclear Fuels has got a very large drill program happening at Kaycee, also in Wyoming. I'll turn it over to Greg here to cover off the competitive landscape.
Yeah, thanks, Colin, and thanks everyone for joining today. Yeah, I just wanted to give a little bit more background. Colin and I have had similar career paths. Technical backgrounds, and then quite long duration as uranium analyst, similar to Mr. David Talbot. And thanks, Dave, for hosting us today. And through that time, I think we both grew to understand the importance and relevance of domestic U.S. uranium production, which really, back in the 70s, 60s, the U.S. is almost self-sufficient from a uranium production perspective. And really, we think that there's an opportunity with the current landscape for that production growth to grow back to a meaningful amount of, supply a meaningful amount of domestic demand. And that's really what drew us both, from our careers in capital markets to take on CEOships at our respective junior uranium exploration development companies. And really, as this chart shows, the explorers in the uranium space are very important aspect of the overall environment. However, you do see a bump in terms of valuation as you move up that scale from explorers into developers and then producers. You can see that here from the respective market caps. And we really think that this transaction, by combining premier American uranium and Nuclear Fuels together, really helps accelerate us into that developer category, but yet maintaining a strong focus on domestic U.S. exploration, both on the in situ recovery or ISR component, as well as on the conventional side, particularly with Cebieta asset in New Mexico. So that's something that we think is really important, really sets the new premier American uranium on a pro forma basis out from a lot of the peer group companies. So in terms of, the competitive landscape further, as I mentioned, exploration has been a very important aspect from the nuclear fuels perspective. And on a combined basis, Premier American Uranium will look to continue with that. As Colin mentioned, we have a very, very aggressive philosophy as it relates to exploration. If you look at the combined footage drilled in 2024 between Premier American Uranium and nuclear fuels, you had almost 210,000 feet. That's more than all of the U.S. peers put together last year. And we're looking to continue that, with both companies currently actively drilling on our respective properties in Wyoming right now. Kaycee, where we initiated in late May, early June, our drill program at the Kaycee project to follow up on our program from 2024, which is very successful. We'll talk a bit about that a little bit more in a few minutes. And just recently, Colin and the team at Premier American Uranium started up drilling at Cyclone. And you can see here, we really look to continue that aggressive exploration because we do think that there are meaningful new discoveries to be made in the U.S. with a focused exploration strategy. And we'll pair that with the 43101 compounds coming out of Sabita in New Mexico. Colin, I'll hand back over to you to walk through the combined leadership and board.
Yeah, sure. Thank you, Greg. As I mentioned, what I think is the best board for a company of our size in the sector. We have our chairman, Tim Rotolo, co-founder of Sachem Cove, Marty Tunney, CEO of IsoEnergy. Marty was originally the chairman of the board, and Tim was the CEO when I was hired back in March of last year. Marty remains on the board. Tim moved to chairman. We've got Mike Harrison, managing partner at Sprott, on the board. Mike Henriksen came over with the American Future Fuels transaction. John Indahl is a very, very well-known lawyer out of Santa Fe, New Mexico. He was a really strong addition to our board with the American Future Fuels transaction where we acquired an asset in New Mexico. John continues to be the head legal counsel for the Uranium Producers of America, and he's been an incredible board member from having litigated or advised or consulted on almost every uranium-related producer, license, permit in New Mexico over the last 40 or 50 years. Just makes John an invaluable board member. So very strong board. As I mentioned, Greg planning to join, and one other nominee from the Nuclear Fuels Board. Got myself on the management side, CEO, and Phil Williams, IsoEnergy. When Consolidated Uranium spun out Premier American, they were in the process of being acquired by ISO. At that time, Phil became the CEO of ISO, but continues to be an advisor to Premier. And all these things were really, really important to me. Joining the company, as Greg mentioned, as a former research analyst, not a lot of capital markets experience in that job. And with this board, they've literally done and seen everything, many transactions under their belt, incredible mentorship and guidance when it comes to kind of really executing inside of this vehicle, which was designed to continue that consolidation strategy. So very, very strong board with great oversight, which to me adds a lot of confidence and de-risks the strategy that we're trying to execute. Uranium, everybody's heard. It's been incredibly interesting times since kind of the Sprott Physical Uranium Trust started buying uranium and really seeing the price move and peaking at $107 in February of last year. All of that kind of in parallel with some of the strongest news we've seen in the sector since I've been an analyst, which is 16 years analyzing the space, looking at all the different companies and the macro. In past cycles, we had a situation where uranium would be potentially facing a bit of a supply deficit. We'd see uranium prices improve. We'd see a supply response, and then we'd see uranium price come back down fairly quickly. I really believe that this cycle is completely different. We've never had this similar situation where we're undersupplied clearly, but also with an accelerating demand profile. Just an incredible amount of news from big tech is really important. The reason big tech is highlighted here, Google, Oracle, Meta, Amazon, Microsoft, to me, the most important part of the role of big tech in the nuclear renaissance that we're seeing is really the deep pockets. I mean, we can all see kind of the traditional infrastructure builders and the motivation to build full-scale reactors and increase the global fleet. But as far as kind of some of the new tech SMRs, microreactors, other things like that really kind of go on top of the existing demand forecast that we have going out kind of 10, 15 years is big tech's deep pockets, the ability to move those projects forward, get some SMR analogs built, operating, is really going to de-risk that new tech and the adoption of that new technology in a way that I don't think could happen as quickly without them. So very, very important to see, to support cloud computing and AI, which we all know is power intensive, but also to deliver that in a green way, emission free. We've all kind of come to the conclusion that the best and most obvious solution is nuclear. And I think big tech leaning into that really helps the profile of the sector and accelerates that demand. A couple other notable things on this slide: the COP29 conference last year added a few more countries. We now have 31 countries across the globe trying to triple nuclear capacity by 2050. I mean, that's a very important goal. If we were to accomplish half of that, it would be incredibly robust and bullish for uranium. And tripling nuclear power output, the 31 countries involved in that agreement are the top 7 or 8 nuclear fleets in the world are included in that. So for the U.S. alone, you're talking about going from 4 reactors to almost 300. So it's an incredibly bullish statement from those groups. And on top of that, we've got U.S. specific catalysts, executive orders saying that the U.S. wants to have 10 reactors under construction by the end of the decade. That alone, it represents immediate demand of £1 million per gigawatt for under construction reactors, 350,000 pounds a year each after. So very, very robust. The best supply demand fundamentals I've seen in the sector since I've been an analyst. This is just a quick snapshot of the combined portfolio of the two companies. As I mentioned, 5 states, 12 projects, big focus in Wyoming, and an important project for us in New Mexico. Bringing this all together under one portfolio gives us de-risks for investors. It gives us a lot of options to go out and explore. But most importantly for me, the Wyoming package, we're drilling at Cyclone right now. Nuclear Fuels is drilling at Kaycee right now. We've got very strong potential news flow from 2 drill programs from here to the end of the year. And at the same time, towards later in the summer, a PEA and a resource update for New Mexico. So some really, really strong catalysts coming from the portfolio already. I'll hand it over to Greg to just give you a quick overview on Wyoming. And Greg, why don't you take it over?
Absolutely. Thanks, Colin. So yeah, when it comes to domestic U.S. uranium production, when the U.S. turns on, it's really led by Wyoming, which, is a huge contributor from a uranium production perspective. Interesting to note that, since the 2000s, early 2000s, 100% of that production has come via the in-situ recovery or ISR methodology. So it's a technology that's proven, is very well accepted and understood in the state, both by state officials. And it's important to note that Wyoming is what's called an agreement state, so that the permitting is done at the state level rather than through the NRC. That accelerates things quite substantially. And also from the ISR perspective, the geology is amongst the best in all of the US. So you can see here where our flagship Kaycee project is located up in the western part of the Powder River Basin. Interesting to note that, as Colin mentioned, there's 2 permitted ISR plants located within tens of miles of the Kaycee project. However, we do think that Kaycee has the exploration potential to really justify a standalone plant unto itself. And really, that's really what led us to the Powder River Basin and the focus there. In terms of the plan as it stands right now, from a Kaycee project, as I mentioned earlier, we started up drilling in late May, early June, with a budget of at least 100,000 feet of drilling. And important to note that last year in 2024, we had a very successful drill program, but really we were focused on confirming, extending, and expanding the known zones of mineralization. The historical resource on the property, non-43-101 compliant, is about 1.7 million pounds at about 0.1%. That grade is very much in line with some of the other projects in the area. You can see the Irrigary and Christensen Ranch ISR facilities immediately to the north. You can see the Nichols Ranch facility immediately to our east. That grade is very much in line. However, what we did later in the program in 2024 is transition towards drilling for new discoveries. We really think that the potential of Kaycee has the ability to deliver new, meaningful discoveries of uranium mineralization, and that's going to be an important catalyst and news for driver. We made some initial discoveries at our outpost and trailless zone late last year, and the 2025 program is kicked off and is now following up on those, as well as targeting other areas over on the eastern part of our project where we think there's high potential for meaningful multi-million pound discoveries on the project. In terms of a little bit more detail on Kaycee, I won't spend too much time here, but as Colin mentioned off the start, we do have an exploration target in our 43-101 report of 11.5 to 30 million pounds. Again, we really think that potential is going to be delivered by testing for new discoveries rather than just focus on historically defined mineralization that was identified back in the 70s and into the early 80s before exploration was really stopped. It's important to note as well that there was no exploration drilling done on this project during the 2003 to 2008 uranium boom. And that was something that really drew me to the project. Effectively, this project was never consolidated under single ownership during that time. And it was something that really drew me to the project. And thus, I think there's really good potential to make new discoveries there and really drive the share price appreciation of the combined entity. I'll hand back over to Colin and talk a little bit about the Cyclone project over in the Great Divide Basin.
Yeah, thanks, Greg. So Cyclone is a project that we drilled for the first time last year. As I mentioned, we have an exploration target from a 43-101 report from 2023 on the project that outlined a 8 to 12.5 million pound resource exploration target. This project is located about 12 miles west of UrEnergy's Lost Creek well field and processing plant, and about the same distance from the historic Sweetwater Mill, which is a licensed processing facility which hasn't operated for some time. But the new owner who acquired that is looking to, has said publicly that they plan to upgrade that to have ISR processing capability. So what I really like about Kaycee and about Cyclone, aside from its potential resource endowment, is the proximity to these existing processing facilities. I really think that 2 to 3 years from now, it's going to be very strategically important to have resource that could potentially be extracted and delivered as a satellite and delivered to some of these processing facilities. I think at that point, there's going to be a demand for additional resin to fill the supply gap. And we're going to have some operating plants that have a couple of years of production under their belt and are now optimized and looking to expand production. So Cyclone, we announced the commencement of drilling on July 16th. We're moving pretty quickly. We're looking to have an update out in the very short order as to our progress there. It's a 20,000 foot approximately program, 25 holes. You can see some of the, let me just flip to the next slide, give you guys a little bit of background. So what you've got in the area where we're drilling, where we drilled last year, is a half-mile trend that we established of mineralization that includes a bunch of holes that are above that 0.02% EU308 and 0.2 GT cutoff. That's a big part of what we're going to follow up on in this current program, but we're also looking at other potential targets on that Cyclone Rim target. And I think that we're going to be able to deliver some interesting results in the next kind of month or so as we work through that program. But highlight drill intercepts 0.088% at 10.5 feet last year, GT of 0.92. For reference, they're mining at UrEnergy's Lost Creek plant, an average head grade of a 0.048%. So very, very good grades relative to kind of proximal production. And we're looking to establish critical mass here, and move towards resource delineation at some point, but we're still drilling to understand the project and the potential of it. So looking forward to putting out results, as I mentioned, kind of periodically throughout that drill program. The Osborne Draw target, we drilled Cyclone Rim last year, put 41 holes in it. We put 5 holes into the Osborne Draw target. On the map here, you can see Osborne Draw over here. Osborne Draw is located down here just below just to the east of the main Cyclone Rim target. And so in the lower graphic, you can see where we drilled. Now, those 4 holes in the lower graphic each pair is about a mile apart. 4 of the 5 holes hit uranium mineralization. One very wide, 24.5 foot at 0.021. So above. The reason 0.02% EU 308 and 0.2 GT are important is because those are the constraints in the Great Divide Basin being used for Ur-Energy's resource. So that's really kind of the threshold that we're trying to meet. So having 0.021% over 24.5 feet for a GT of 0.51 is a very interesting result, and really speaks to the potential of Osborne Draw. But our 2025 drilling is focused on the Cyclone Rim target, simply because we had more holes in there. We had great success last year, and we wanted to really go out and continue to test that property for resource potential, because I think that delineating resource is probably the best way to kind of re-rate for value in terms of exploration. So that's the focus of 2025 at Cyclone. And just quickly on the Sebieta project, I mentioned several times, we have a 23.5 million pound resource that we established in June of last year. And the plan for this year is mostly a desktop exercise. There's some resource, there's some historic drilling in this Willie P area at the project that wasn't included in our initial resource from last year. And we've not since digitized that data, and so that the independent QP can model it. So within the resource update that we're planning, that's where the resource is coming from, having not drilled it since the last resource. But the PEA for me is the more important piece here. The idea is to go out and kind of explain to the market the potential of this asset, what it could deliver in terms of production and how much it would cost and what the potential economics of it are. And there continues to be good exploration potential at Sebieta. We can go out there and drill to grow the resource, but the best use of cash in my mind was to go out and establish the economics, and then that will justify the additional cash on resource expansion and delineation drilling. So that's the strategy with Sebieta. So really looking forward to delivering drill results from 2 projects this summer and the economics for our New Mexico project. This is just a timeline of the transaction. It's pretty straightforward. I mentioned that the shareholder votes in August, and that we've got August 13th, and then we move towards close at the end of the month. So that's a pretty good overview of Premier American and the proposed transaction with Nuclear Fuels, and we're really looking forward to getting that done.
Okay, great. Thank you very much, Colin and Greg. Great presentation. So we're now going to kick off the Q&A portion of the webinar. Reminder to everybody online, you can type your questions into the chat box, and we'll get to as many as we can. So I already have a few questions here, guys. You are creating a larger platform to acquire, explore, develop uranium projects. Does the deal change any priorities here? I assume you're not going to push so hard on all 3 or 4 main projects.
Yeah, I think I should probably take that one. I mean, Greg, we're very, very attracted to Kaycee because of its proximity to existing plants, but we're lucky enough to have them both being drilled right now. I know what you're saying, Dave. I think it does make sense to focus and put cash into your best potential near-term resource. These are both exploration stage. Neither one has a resource on it. And so that could be a consideration for 2026. But what we have right now drill results coming from 2 different projects. And I really think that that's what is going to dictate where the money goes and what the priority is. Whichever one has the best potential to move towards a resource soonest is the one that we should pursue. So it's going to be results driven, but you're right. Potentially you focus and try to get to those milestones on one project at a time in the future. So we're lucky enough to have both companies drilling, and we'll have a lot of data by the end of the year to make decisions about next year.
And if I could just add in, we really see this as a very complementary portfolio of assets with a more advanced project at Sabieta, in terms of studies coming out, people are able to wrap some economics around 43-101 compliant pounds and dovetail that with aggressive exploration, which is going to be a really important news flow driver. So I think absolutely, it's sort of, we're not going to go through that sort of quiet period where it's just studies and advancing through. Maybe a little bit what the market finds less exciting times, where you're really more reliant upon commodity price appreciation to get some value, incremental value for Sabieta. Whereas we've got some exciting exploration stuff coming down the pipe out of Wyoming. So it's really it's a firing on both engines for an exploration development company.
Mm-hmm. And I'm sorry, go ahead, Colin.
Well, I was just going to say, as you know, Dave, it's always market dependent as well. If we're looking at $200 uranium, there's going to be a aggressive approach to all the property. So it's always going to be done in the context of the market and the ability to raise capital and fund as well.
Mm-hmm. Absolutely. Now, do you have any main bottlenecks that are really preventing you from going faster right now? Would it be cash or expertise or staff shortages, maybe rigs, or having the licenses for certain projects? What's really the bottleneck here, trying to move faster?
I think in Wyoming, Greg and his team have really showed that if you want to move fast, you can. We showed that drilling over 200,000 feet on a combined basis last year is more than all the exploration peers combined. So on the Wyoming side, I think we can move as fast as we want to. That project is probably more about Sabieta because it has a resource, and we're looking at preliminary economics and how do you get from there to production? And yes, there is a permitting process that will be probably extended, as it is for even in the best jurisdictions in the world. Permitting takes time, and you want to do it properly so that you don't create a legacy of problems and make it more difficult. But we do think that what we're seeing in the US, especially in New Mexico, we've seen this Fast 41 list come out, and that's a federal land related program that is accelerating 4 different projects in New Mexico. And we often get asked why Sabieta is not on that list, and it should be. It's actually for a very positive reason. The reason that we haven't been named on the Fast 41 list or invited into the program is because we're on the private lands of the Sabieta land grant. We don't have a NEPA requirement, and therefore Fast 41 doesn't really help or complement our project. But the fact that we're on private lands means that we have we're always going to be engaging the periphery, everybody within an impacted radius. But the most important group for us is the Sabieta land grant group, and they're quite positive. They're aligned with us. They have a royalty on production, and I don't think that in New Mexico we have any differentiating permitting factors. And in fact, I think that we have probably some positive attributes given the private land position. So can we accelerate it? There's no way around state permitting in New Mexico. So all the projects are going to have to go through that process under the new mining code, which isn't that new anymore. But we look forward to engaging. We're always engaged with the regulators, kind of looking at the roadmap to production. But we have lots of work to do in the meantime. So, that process is not taken lightly, and production doesn't pop out of nowhere. You have to make sure you have all your ducks in a row environmentally and infrastructure wise.
Mm-hmm. Okay, we'll probably come to that project in a second as well. Just want to touch on a couple other things. This is the merger here between the two companies. It's an all-share transaction. Why such a high premium paid for nuclear fuels? I think it's about 54%. Is that because you see such good corporate and exploration synergies playing out?
I think so, and it was definitely a factor that they had a really strong cash position that they had raised at 40 cents back in November of 2024, which I mentioned. But we wanted to signal to nuclear fuel shareholders that we thought that they paid a price that was reasonable and attractive. And that it was definitely part of the discussion and negotiation that we wanted to reflect something in the range that they paid, because we thought that was a fair price. And things had changed for market-wise for sure, but for the potential of Kaycee and what we think we can get spending versus market cap and share price outcome, we still saw it as a great deal, even though it's approaching merger of equal status at 40% nuclear fuels, 60% Premier. But Greg may have some. Greg was the other side of that negotiation, so maybe he has something he wants to contribute as well.
Yeah, no, I think Colin hit on the main points, and for me, it was really important to that pro forma ownership that Colin mentioned at 41% for nuclear fuel shareholders of the combined vehicle entity moving forward. It was really important. We did a lot of due diligence on both Wyoming assets within Premium American Uranium, and then especially at Sabayeta to make sure that we understood the opportunity risk there, and we're very comfortable with that. I think there's a great aspect going forward, and that the sum of the parts is much greater than the individual entity. Really think that it's a great transaction for nuclear fuel shareholders holding 41%. And so that for me was the real driver of that premium.
Mm-hmm. Okay. And like you guys said, very strong board here, getting stronger because Greg, you're a board nominee. Do you plan to be fairly active with the new firm?
I can answer for Greg. Greg plans to be very active as a new board member.
Oh, sorry. I thought it was for overall, M&A activity. I will be very, very active. Yeah. You know what? I've committed to basically staying on and in basically overseeing the drill program going on at Kaycee through the balance of the current 100,000 minimum drill program, 100,000 foot minimum drill program. So I'll be very, very active, in terms of going. People who know me know I'm very, very hands-on. So I get to spend a lot of time down in Wyoming at Kaycee, with the team there overseeing the exploration. So we'll continue that through the balance of this drill program, and then look to work really closely with Colin. And probably one of the genesis of the transaction was Colin and I bumping into each other in various M&A processes, looking at additional assets, principally within the U.S. uranium space. Rather than fighting over them, potentially talking about how we could work together. So there's still a lot of potential in that we'll look to work really closely together on. So I plan to be very, very active through the course of the drill program, and then also on the corp dev side of things.
Okay, so let's look at that corp dev side. Are there any? What comes next? Are you still looking for ISR assets in the U.S. in some of these great jurisdictions? What's your plan? What's your strategy?
Well, I think so. I think so. It's going to continue to be U.S. focused going forward, and we will always prioritize projects in jurisdictions where we have expertise or we're active. So Wyoming makes a lot of sense for potential acquisition because Greg's team has been very successful at permitting. We have as well. So we've got strength in Wyoming in terms of our ability to operate. But there's definitely opportunity in some of the other states, including New Mexico. But I think the most value that you can get is kind of complementary assets first, and then you probably won't see us heavily active in Wyoming going forward because that's not where we're establishing critical mass. And some of our other projects in the portfolio, I think there's interest in the Colorado assets potentially from various groups that operate there. So there's great potential for horse trading with other sector participants and landowners. Greg's team had its own kind of pipeline of potential acquisitions. We've got our own list of priorities, and when we bring those together and start advancing those initiatives, I think it was about a year between our American Future Fuel acquisition and the announcement of nuclear fuels. And I think that the tenor of that is going to increase as we grow the size of the vehicle for a lot of the reasons that we talked about.
Okay. Now, you've always had strong strategic support, and now it's combined Sachem Cove and enCore and ISO and Mega. Do you get a lot of input from or feedback from those groups, maybe interact with them a lot in order to come up with your next ideas, or even get input on what you're doing now?
It's specifically related to, we don't necessarily communicate specific ideas to the shareholders, but at the board level for sure. And Tim Rotolo is the chairman of our board, so there's definitely consultation from an investor perspective. I speak to Mike Alkin and Sachem Cove quite regularly. They're really, his opinion, his level of expertise in the sector is extremely high, and the depth of the research that they do. I first met Sachem Cove as a client as a research analyst, as an institutional client, and developed that relationship. But they quickly had more analyst horsepower than most brokers, and really developed a level of expertise and depth of knowledge on the sector that very few have. So they're an extremely important resource for us, and for sure I consult with them on anything that's fair to consult on without disclosing anything material. Mm-hmm. So quite an active relation, like in terms of general interaction and discussion about the corporate strategy, very regular.
Yeah. Okay. I agree with your Sachem Cove comments. I could probably run circles around most of us analysts. In New Mexico, Sabayeta has gone from 0 to 23.5 million pounds fairly quickly. Good grade as well. When should we expect that resource estimate, and would the PEA be coming out at the same time, or would you stagger those?
No, those will be concurrent. And in terms of, it's a bit of a market nuance, or a regulatory nuance that bringing out a technical report in the middle of a transaction has implications about to the transaction, even though it's a project that's unrelated. So our thinking right now is to get that PEA out following close of the nuclear fuels transaction. But the resource update will come with it. The resource update is based on historic drilling, not on new drilling. So we didn't see it as it'll be augmentative, but not earth-shattering given the existence of the known drilling. So the most important thing there is establishing the economics and tying in that resource that was left on the table because it wasn't digitized into a production plan. So I think it's best to put those out concurrently because they're integrated, and timing post-transaction.
Okay. And that would certainly, that PEA would certainly give us something to value. But how is that project going to move forward then? Is it all about resource growth still?
I think with the PEA in hand, depending on the outcome, there would definitely be some. We see some low-hanging fruit in certain areas, connecting some of the deposit areas that I think you would definitely do. But what's going to be prescribed in that PEA is recommended to move forward is going to be metallurgical type data gathering for the approach that we're taking. So some core holes to recover material to do some advanced metallurgical test work and so on. The usual type of work between PEA and PFS that really gets you kind of from indicated and inferred to measured and resource upgrading. And I don't think that we need a lot of drill density for that. Ultimately, it's up to the independent QP. But what I think we need for that is additional backup to the metallurgical work to really validate the assumptions of the PEA.
Okay. As far as exploration budgets go, do you think Wyoming is going to be the target destination for most of that cash? And then, how do you break that down with, say, Kaycee versus Cyclone? Both of them have great potential. They're near existing production. Kaycee might be a little further along, but I think it's shifted towards discovery as well. So, where do the priorities land between those two projects?
Well, I'll let Greg talk about his budget for Kaycee. I can tell you, drilling 20,000 feet at Cyclone using last year's contractors, we've been extremely efficient in the field. I think that's probably going to come in at 700,000 US or less for 20,000 feet, which is, even more efficient than last year, because last year mid-program we changed drillers and we got really efficient after that, ended up coming in at budget. But on Greg's side, the Kaycee program is really kind of our number extrapolated 5 times. So it's a very similar type of kind of cost and budget, but I'll let Greg talk about it because, we haven't combined yet. So it's probably best.
Yeah, and I think I mentioned our board approved budget of a minimum of 100,000 feet for drilling for Kaycee for the 2025 program. We're running, based on last year's numbers and projected for this year, about $25 US per foot drilled. So that's about $2.5 million US for our budget for Kaycee on that minimum program. And again, I think going back to your question, it's really going to be results driven. We're gonna allocate footage and dollars towards where they're best, we're getting the best results. So it's really, post close of the transaction, I really think, on a go forward basis, we'll run both programs in parallel through because they're both underway. But then for 2026, Colin and I will sit down with our combined team and really look at where we're going to get the best bang for the buck in terms of resource delineation.
Yeah, exactly. You did say the quickest, or at least Colin said the quickest way path to resources is probably drilling Cyclone's nice half-mile trend there, at least of those projects. But the Osborne Draw returned some pretty nice grades towards the end of last year's program. Yeah. Are you going to be drilling that at all this year?
We're not going to be drilling that this year, and that was a strategic decision. Well, I love the potential there, but again, we only had 5 holes in it. It's really exciting to have more than a mile apart a pair of mineralized holes on both sides. But in terms of use of capital and resource delineation, I think that pounds in the inventory goes a long way in terms of re-rating and valuation. And we simply had this half-mile trend at the Cyclone Rim target that was mineralized, many intercepts above cutoff. So that was really the best place to go back to and drill. I think that if we went, we could definitely turn up some interesting results at Osborne Draw, and we will in the future. But I think, the closer you can move something towards resource, the better the valuation return. So it was really just a strategic decision to go and continue to drill where we had more holes.
Okay, good. So as a company with assets in the U.S., how have you seen sentiment from American investors and maybe even the American nuclear utilities, if you're speaking to them yet? How have those evolved over the past couple of years?
It's an interesting question. I mean, we're not in discussions with any utilities at this stage, but I mean, we've had calls, but really kind of recognizance type calls. The utilities, more than I think before, are out there trying to understand who's got which project, what the development kind of timelines and potential are, and just I think they're trying to get ahead of the potential for legislative reliance on more U.S. production, which hasn't been mandated. But I think given all the movement that we've seen in other sectors, we saw a 50% tariff on copper. There's just a lot of focus and support from the U.S. federal government for energy independence and domestic self-sufficiency. So I think that we're starting to see more utility interaction with much earlier stage projects, which is really positive. It gives them comfort to know that the resources exist, and it gives us an opportunity to explain to them kind of why prices have to move higher. And as an analyst, it's a real opportunity to kind of feel them out, but also to let them know what resources are out there and what I think it's going to take to really have a material U.S. production offset, because as you know, it's been a long time since the U.S. had material production relative to its consumption. But yeah, I mean, the biggest changes that we've seen in the last couple of years are definitely kind of the federal support for domestic energy self-sufficiency and nuclear in general.
Okay. Now, a lot of people speak about demand from SMRs, big tech, AI. Let's start with SMRs, perhaps. Increased demand, perhaps a couple of years out. We'll see. I think WNA will have those numbers in their next report at the end of next month. But why can't technology already used in submarines or aircraft carriers be used?
Yeah, I mean that when you're talking about placing submarines and aircraft carriers have one thing that is potentially advantageous. It's unlimited cooling availability. Those designs are extremely interesting, and I always really loved various marine applications for kind of micro reactors, especially if you've ever owned a boat, having a 25-year refueling cycle is just an incredible dream. But what we're seeing, and fourth generation reactors take a lot away from third generation reactors, and many of these self-contained molten salt cooled reactors are really the modification and the advancement of those prior generations. So you've got functional fission reactors, but you need an in-place cooling solution. So they're just not totally appropriate for on land SMR use. But taking that approach from the design stage for Gen 4 SMRs has really generated a lot of different interesting designs, and some that I think will be very easy to deploy. Westinghouse's 300 kilowatt version is a scaled down version of its AP 1200, I believe, and that one of the biggest barriers to me, and the reason I mentioned big tech in the context of SMRs is because one of the biggest barriers in nuclear is that it's a large investment, even at the SMR stage or scale, and it carries risk. So brand new designs, of which there are dozens of SMR designs competing for leadership. There are a few in that pool that are, I think, a very small leap to commercialization, and some that are a bigger leap. Some are taking a lot of technology that hasn't been deployed at a kind of commercial scale. So I think we've got to look to big tech to take some of that risk, and they can do that because they have very, very deep pockets and go out and build SMRs, not wait for utilities who where their primary business would be at risk and their balance sheet at risk to kind of develop and prove out some of those reactor designs. And the normal market mechanisms coming in and financing these things to move them forward quickly. I think it's just so important that big tech is interested in this in terms of bringing SMRs to market much faster than I think they would have otherwise.
Yeah. And that AI demand, or even announced future demand rather, really helped drive uranium prices late last year. Unfortunately, sentiment turned at the beginning of this year before rebounding again recently. But what about supply? We consistently hear about how hard it is to get production going. Just today, a couple other uranium producers announced pretty much that. One in the U.S., one in Australia, and how do you see Premier American trying to overcome these concerns and really become the next supplier of uranium?
Well, we're going to have the advantage from the Wyoming portfolio and New Mexico as well. We're going to have the advantage of a lot of domestic equity capital being built. We're going to see, it's always going to be difficult to mine. It's always going to be, what works on the desktop is tricky to execute in the field. We've seen it from almost every uranium mine that I've ever seen get built, and almost any mine in any sector. It's extremely hard. It's difficult to hit the numbers in your PFS feasibility study from a capital perspective before you're even in production. Your permitting timelines can shift all over the place with regulatory change and government change votes. So it's always going to be tricky, but I think for us, where it's going to be a little bit easier because I don't see the push letting up. And so as we move our projects towards resource delineation and then on to permitting, once we see the critical mass, we're going to have existing producers who have been in production for 3-4 years instead of 8 to 16 months. And it's going to be just a little bit easier with some successful analogs in the space. I think that investors are still looking at some of the new production in the US and outside and saying, okay, this is more difficult than we thought. How does this affect cash flow? What are we paying for a multiple in terms of cash flow or earnings? And are they going to hit those numbers? Once we see some success stories in the space, some people generating some good cash flow, showing investors that it can be done, I think that the risk capital is going to be more available to new production than the frontier, the first stage. Greg, did you have any thoughts there?
Yeah, and if I could just add in, I think our job is to explore, discover, delineate, and de-risk. Obviously, we're looking to sort of bridge that gap, bring our projects along that pipeline. But really, if you look at the high tech entities out there who are looking to get involved in nuclear, you look at big oil. Those are all companies that are going to look to fully integrate at some point in the future. So I really think that our job is about delineating these resources, de-risking them, and then really with enCore as Nuclear Fuel's largest shareholder, we've got one of the largest US ISR producer. We've got that ability to lean on them if we were to sort of move forward with production ourselves. But really, I do think that, like many other commodity markets that we're all familiar with, a level of consolidation does happen at some point, particularly when you've got the initiatives going on with big tech, big oil, as it relates to sort of diversification of energy supplies.
Okay. Well, we're up on the hour, guys. So Colin Healy from Premier American Uranium, Greg Huffman from Nuclear Fuels. Thank you, guys, for joining us today.
Thank you, Dave. Thank you, Red Cloud. Thanks, Greg. Really appreciate it.
Thanks, David. Thank you, everybody.
Thank you, everybody else, for tuning in. The dog days of summer are upon us, so our next webinar, at least for now, is Wednesday, August 27th, 2 p.m., but that Taylor's going to sit down with Bunker Hill Mining, but I think we'll probably get some in between now and then. Otherwise, have a great day, everyone. Thank you for supporting Red Cloud's webinar series.